let me attach a little bit to what you just said, and let me ask you, how do you see the current stock price given the developments also we are seeing? The stock price has been flat for many months. Basically, after the dead period, we had a 2x in May. And then after the 2x, then a little bit up, a little bit down, but basically flat. So how do you see the current price? Does it excite you? Is just okay? Or otherwise, no. It's still, I can't touch it at this level.
I think it all depends on the person. Me personally, I don't think 15 is too expensive. If I were to be falling into Palantir today rather than finding it 6 years ago at UDOC, I'd be buying probably at 15. Knowing the potential that it could be having, especially if I know that I've been working on it for 6 years, but if I could see where the potential was in our organization. So anyway, long story short, I think 15 is good. I think if you're a short-term trader, and you're thinking about this for the next 6 months, you might get burned, if you're looking for a 6-month hold or less. But I mean, to me, I think if you ask me where I think that this company has the potential to go, not guaranteed to go, because I can't guarantee anything, I would definitely say in the hundreds of billions. If you look at the opportunity set of what Palantir can offer companies versus what some of these other companies are offering, Salesforce, Microsoft, Google, in terms of the products that they're able to give, which are customized products that are literally changing the way that companies are operating and doing their day-to-day job. I would say, given enough time, this is easily a several $100 billion company, if not potentially in the running for being as revolutionary as a Google or an Amazon or an Apple, if given enough time. What I don't know is at what point do they turn on the dial about being like, okay, we're saving you $200 million a year. We're going to take $100 million of that. So that way, they're only getting, the companies that are using their software are only getting a return on, 50% versus the several hundred, 300-ish% return that they get today. And this is kind of my thought. I think 15 is too expensive for people that are focusing on the next 6 months.
Yeah, I agree with Matt. I mean, if you're long term, I think 15 is fine. I think hundreds of billions is very possible, which is either a 6, 7, 10x from now. But short term rates are still pretty high.
Well, I don't want to spend too much time on it, but just as a thought, I've been criticized for having reduced the position at around 14, then I reduced also at 18, and now I'm actually gradually buying a lot of shares. And the reasoning is simple. The stock is flat, but the business is not. And this snapshot gives a sense of actually
Can you zoom
how
in
many
a little?
things. Yes, sure. I mean, this gives a sense of actually the things that have been happened since the stock started going on lateral move. Basically, we see that these are the developments that maybe by covering the stock every day, we tend to be so much in that we lose focus. But in these months, these 4 months that the stock has been flat, so many things happened, so many validations of the thesis happened that is true. It is kind of silly to buy shares basically at the same price that you previously reduced. But at the same time is what I'm getting now is much more valuable despite relatively few months have passed. So this is not to push any trading idea, just to encourage you to always try to think of what we pay versus what we get. And the more the stock stays flat, but what we get is actually more. And what we have more is not only more contracts, but I would say very strong signals that the thesis is actually working. 5 months ago, AIP was not there. Like it was there, but we didn't know it. We didn't have 150 customers with a capacity to onboard 50 customers and growing per month with this new product. So this to say, keep always in mind that it's not only a matter of the dollar price, is a matter of what I'm actually buying that could be worth that or more.
And risk reduction too, right? Because you've had 1 or 2 quarters since then that have demonstrated GAAP profitability.
Yeah.
And so with that, I think, a lot of this game, which I think a lot of people don't recognize, is like, just like you're kind of mentioning, it's the stage gates that companies go through and risk offloading over time. They have $3 billion in cash. They continue to build that cash. They've now announced and feel financially comfortable to initiate potential for buybacks to offset share-based compensation. They've established more net profitability than they did have before. Their revenue is still growing. It might not be as fast as people want, but like you said, you've been able to get a couple quarters. It's like a no-brainer, right? Amazon, people were buying it in 2019 for $80 a share, and it dipped back to $80 a share in 2022, and people were like, oh my God. Meanwhile, revenue is 3x since 2019. So it's like, if you were buying it back then, or people were buying it back then, why wouldn't you be buying it now when web services continue to dominate? The whole brand and e-commerce brand is double or tripled in terms of revenue. So it's a similar sort of feel. And like you said, as the longer it goes at 15, 3Q, 4Q, 1Q next year, and if the metrics continue going up into the right place, they're getting at a cheaper and cheaper valuation over time. And so $15 today, give it 3 or 4 quarters. If it's back at $15, could be another opportunity. Very different. It'll be very different.
Think the difference between the $15 now compared with the $15 last year before it crashed. Completely different company, completely different setting, risk. Yeah. So that's why I'm excited. Actually, I know it sounds bad, but I crave the stock to crater from here, because now I really see, okay, the validation of the direction, and see a lot of value. It is all a matter of price. The more the price drops, the more I'm happy.
Yeah, I've started eliminating some positions, and now that I've started to kind of trim them, I'm like, okay. And I've gotten like that heartache of starting to eliminate things like Johnson & Johnson and Pepsi and move them into more companies like this, which I think will truly have a fundamental shift in the long-term size of the portfolio. So I'm with you. It's like, if it stays here, I might try to get to 5,000 shares, but I should stop being a little P, meaning puss, and have 10,000 shares, but I just can't do it.
You can afford it, but you're not gonna...
I can. I just don't know if I want to get that. Like, if I was smart, I would. And if I was playing the game like Elon.
Bro, you've been on a podcast for this company I feel like if you have the money, if you're that into it, I get your point. I see what you're saying. But if you're like, I don't have 10,000 shares money, so I can't do that.
Yeah, I'm afraid. Like, I don't know. That would be, what is that? 10,000 shares, so 150 grand would be about the size of my SPY position, so it'd probably be close to like 20 to 25% of my portfolio.
The question is, do you think Palantir outperforms the SPY next decade, right?
I think it would, but there's also more risk, and that's part of it, right? I mean, you accumulate these nest eggs, and it's like, if you have a 7-figure portfolio, you try not to lose it either. So it's part of that point where it's like, if you get aggressive, you can go from 7 figures to 8 figures quick, but you could also go from 7 figures back to 6 figures even quicker, right?
But if you do have 10,000 shares at $15 when the stock's at like 200, you can make a YouTube video saying, hey guys, I got 10,000 shares at $15, and then everyone will pay for your Patreon because you...
nobody watches my YouTube videos anyway.
I made a mistake by trimming. I should have kept all the shares and to make that video.
No, but I mean, look, Arnie, you did get hate when you trimmed, but AIP wasn't a thing when it ran to $11 on GAAP profitability, right?
That's why when I trimmed, it was because AIP was just announced, but okay, maybe it's like Apollo, that the product is there, but you don't see the traction. Right now, we have a product and we see the traction. We have proof of the traction. So back then, when I trimmed, it was, okay, the stock is mooning, the business is question mark. Right now, the stock is flat. I can't say the business is mooning, but is preparing to moon. That's my impression. So from a fundamental standpoint, I'm aware that the stock is not cheap, because when we use the simple rule of thumb, if you use the revenue multiple, it means that the stock is not cheap in any metric. When it was at 6, 8, it was 20, 30 price to free cash flow, to give a sense. So given that premise, I think the stock is not definitely cheap on a fundamental basis how you model it. But if you start considering all the things, all the potential growth that we are aware of, while Wall Street is not, Wall Street doesn't look at the weekly podcast. Like in these 90 editions, there is so much value that you need 100 Marianas to actually uncover all the values that is uncovered here. Okay. And in order to appreciate this company, you need to have compounded knowledge. It's not you just write an effing report as an analyst. An analyst just needs to write a report, does his job, and boom, let's go to the another company. They don't really try to understand things. They are not there trying to grasp the little hints from carp rambling around. So I do believe we have an edge over Wall Street. We have proven it, and I think we will prove it again.
Yeah,
Arnie triggered.
No, I agree. I mean, it's a big deal, man. I'm just more and more excited every day about the company. We didn't even, and Matt touched on it a little bit, but S&P 500, Titan contract, NHS deal. I don't know if any of those move the stock, but if we get a lot of those, 2 out of 3 of those, even 1 out of 3 of those, and we're still stuck in this 14-15 range, might not be the worst
think
thing.
of how many socialized healthcare systems there are in Europe, right? So it's like Canada, Europe, all those different, they could fall like dominoes, and it's like it just continues to establish that dominance of the organization.
And if we get the NHS contract, I think the market might give it a little pump, but it'll be sold off immediately, right? There's no moment. So like,
imagine if it drops with the NHS deal getting
that'd be
done.
great. Oh my god. Yeah.
I think the thing that really needs to is, customer count doesn't matter. I think at the end of the day, Wall Street, I think this is going to get, the only reason why the stock is where it is institutional investors are starting to wake up, and it won't really start to move the dial unless growth really starts picking up into the 20s again.
Yeah. 100%.
For revenue growth.
100%.
Yeah.
And that's why, we think the growth is coming, either we're right or we're wrong, but if we're right, and I think we're right, and we get to keep it up before Wall Street, because they need to see the growth, we can get in before the growth happens. There's where the alpha is here.
Wall Street,
but I think it'll be a couple quarters.
Only when Wall Street sees things only when they receive a notification on Bloomberg, and they can look the financial tables with a percentage on top. And hey guys, that's already too late. So
yeah, and there are people on Wall Street that manage money, not like JP Morgan guys, but people that manage $30 to $50 million, which is relatively small, that have messaged me. I know they messaged you, Arnie, saying, we read your Substack, we watch your shit, we bought it at $7, and we're up a lot of money because we found you guys, not because we found JP Morgan's report on it.
I mean, seriously, I'm not joking. I've been writing and reading analyst reports for a while now, and I'm confident in saying there is more value in what we share. It is true. It requires effort. You need to like listening to us at weird hours, but I do believe you can find real value only when you talk with people that do this thing, even if the incentive to actually do this is actually very low. Now, we are talking from a position where we have already half proven that we are not saying bullshit. But at the beginning, the incentive for us was actually very low because we have been sharing deep content on Palantir, not when it was a meme stock, but actually when things were going going very bad. So
all 3 of us remember when we're talking at $6-7, and every Twitter comment or YouTube comment is like, well, why? Well, if the stock's so cool, why is it at $6? And then you have to answer that question. You're like, I don't know, but I still think the stock's pretty important. Or the company is,
Wish I bought more.
So
wish I bought more.
Big bang on the table for us.
Yo, we had to deal with Carp banging on the table. We had to deal with him saying we're not going to be gap profitable till 2025. We had to deal with Cathie Wood selling 40 million shares. Like the shit we've been through, only to be up 10% in a year. It's not bad.
I mean, you see, it's quite funny to think YouTubers were dropping videos like hell. Oh, Carp is banging on the table. I sell the stock.
Yeah, that did happen. YouTubers with big influence sold a stock because People banged on the table.
I don't think. Also, I mean, I want to say something, and I don't want to get people's hopes too up because I don't think it's going to impact us in the next 2-3 years. But over the course of 10, if share buybacks are actually implemented appropriately for this organization, and they distribute something like 10-20% of their cash flow from operations eventually being towards share buybacks. I mean, if the company actually grows and the share count goes to 1 billion rather than 2 billion, I mean, that's a 1x right there, right? If you were to buy back 1 billion shares right now, the stock would be worth $30 instead of 15. And so then you think about it, it's like, okay, well, shit. Like then if you think, well, I think my current prices would be $150. Now think about if they bought back half the float, your share price is actually going to be $300. So you have to start to recognize is like, you can start getting to a point here if they actually are doing prudent share buybacks. And I have a really good example with AutoZone and at a later date, but I know Amit's got to go on his date.
I got to go to sleep. I got to wake up at 5 a.m. to do.
Yeah, you got to go on your date with Roshni. So I'll.
Is that your ex? Is that why you brought her?
I wish.
Roshni.
But all right, I'll shut up now.
Well, I don't think the stock buyback is aimed to dramatically reduce the shares at this point. But at least knowing that the dilution is a concern that they are actually addressing both from the SPC standpoint and the share count. If you combine this gap profitability plus the fact that intrinsically the company is saying we don't leave the stock to go shit again because we are happy to buy back our shares while staying gap profitable, that to me is a positive hint.
Yeah.
Obviously, it needs to be contextualized and so on, but at least is a good hint. So the stock at 14, 15 right now is a very, very different stock than it was at the same price months ago, in my opinion.
All right. That's it for us. Thank you all for joining. Matt and Arnie's Twitter in the description. If you got any value out of this, please follow on Twitter, and we will see you guys. Oh, Matt, thank you. No member. Matt's a member again for the channel. When Lambo, everyone should be a member. Thank you, Matt, as always. And shout out to Matt's ex, Roshni, that he's thinking about deeply right now.
I wish, man.
Bye, everybody. See you next Friday. Have a great one. Have a good weekend. Bye, everybody.
Bye.